Good afternoon, everyone, and welcome. I am Lorenzo Coruzzi. I'm a valuation director at Brand Finance, and I'm the B2B lead. So this year actually took charge of this study that we are presenting here today. We're gonna dissect and go through some of the insights that we had about the world's most valuable B2B brands. I won't dwell too much on Brand Finance. You know, David already explained who we are and what we are about. So let's get into the interesting stuff. B2B purchasing decisions are high stakes. This is actually a conversation that I was having with a prospect a few weeks back, which I thought exemplified really why B2B brands are so important. You know, here we are talking about a software company, $1 billion plus in revenue, and they were saying last year we were pitching for a 50 million deal. The buy team loved it, it fit the purpose, but then when it went to the board and we said we want to spend 50 million with this company, they said, sorry, who? And that really exemplified, I think, why we should start thinking about really investing in our brand. So what is the size of the prize? We increased the ranking this year from 250 to 300. The top 300 B2B brand values are valued at 4 trillion US dollar. To put this into context, the UK GDP 2025 was 4.3 trillion. So there is a significant value at stake, and we'll see in a couple of slides how that is represented in the context of the overall value of the businesses, of these businesses that we have. Almost 50% of the brands are American. If you look at North America, we put US and Canada, actually, literally like 50%. We have a few from Europe, 68, a few from Asia and China. Interestingly, the US brands punch slightly above their weight, with more than half of the index value coming from it. And we'll see over the next couple of slides that when you look at the top 10, you suddenly realize why this is the case. B2B companies, generally what we found, and this we think it's quite an interesting insight, are outgrowing their brands. When you look at the cumulative brand value and enterprise value among the top 300 B2B brands, 2026 versus 2025, you see that the brand value has been growing 13%, while the enterprise value has been growing 15%. So that suggests that the company value is growing faster than the brand value itself. If you look at the top 100, this difference is even bigger. And if you put it in context of the B2C to understand, so what is the gap between B2B companies and B2C companies, and what is the role of the B2B, of the brand value within B2B companies, you see that actually as a proportion of overall enterprise value, brand values move from 13 to 11%, while for B2C is stable at 18%. So this shows two things. On one side, as I said, that the brands are lagging company valuation in B2B space, and on the other side, that generally brands has a lower role to play in B2B, and it's our role to try to make this different. Microsoft remains the number one, so the most valuable B2B brand for the fourth consecutive year. As I said before, there are a lot of US companies, almost 50%, but the overall value is more than 50%, it's 54%. And here you can see why. Out of the top 5, 4 are US brands. One of the other interesting things that we notice here is also how different categories emerge by different geographies. So you'll have US, that is about semiconductor, is about e-commerce, is about software and service payments. You have Asia, which is about, in this case, utilities, energy, which we know it's a great sector there, but also consumer electronics. And then you have Middle East, that is about energy once again, more specifically oil and gas, not surprisingly. B2B brands grew slightly faster than B2C this past year, 13% versus 12% on a cumulative basis. So which were the fastest growing brands? Well, we had 3 that had a growth of above 100%, effectively Starlink, NVIDIA, Rheinmetall. When you look at these 3 brands, really, we are looking at different sectors. We are looking at aerospace and defense, we are looking at semiconductor, and we are looking at iron mining and steel, if you want, with Rheinmetall. When you think about how does a brand grow in terms of brand value, you have three key value levers. The first one is you have to have a strong brand and you have to improve your brand strength if you want to increase in value. The second is business performance and business outlook. The third is macroeconomic environment. So you can understand now when looking at these brands why these brands in these sectors had a particularly strong growth this year. And talking about a brand that had a strong growth, not just this year, but over the last 5 years actually, one of the best examples that we find is NVIDIA. NVIDIA moved over the last 5 years from a gaming niche brand to a global AI infrastructure brand, surging 110%. As I said before, there are three levers. One is brand strength. One of the biggest metrics, one of the most important metrics within brand strength is brand familiarity. And here you can see an example from our research how brand familiarity from NVIDIA moved almost double basically over the span of 5 years. And this is, I'd like to make the point, is not general awareness, it's actually people that saying that they know quite a lot about the brand, and this is amongst the general public, not even the public that is specialized in buying semiconductors and chip. We've talked about, as a key lever of brand value growth, strength. So these are the 10 strongest B2B brands that we have this year. Microsoft is also not only the most valuable brand, but also the strongest brand. Again, what doesn't change compared to the top 10 most valuable is that the top 3 brands are American, are US brands. What does change instead is the type of brands that you see here. You see, for example, Deloitte coming in from professional services, Michelin for tires, Rolls-Royce, a UK brand from aerospace and defense, John Deere from the heavy machinery industry. What you see really here are almost category leaders, right? You can think about those. So what are those traits that makes these brands, and frankly, not just the strongest, but the very strong brand different then? We identified 5 traits. The first one is the strongest brands tend to have inspirational leaders. One of the great examples is Mr. Hung from NVIDIA, top 3 global brand guardian according to our research last year. I was looking at this image and I also thought the other day that there is something about having a personal branding that comes through quite often. If you think about Jensen or about Steve Jobs, for example, also the fact that they are dressed always in the same way. I think it's a way to signal that they are focused on something and then you can trust them and that they are there, and there is a sort of, really a sort of trust coming through that. The second, they lead their category through innovation. They are category leaders. If you think about Accenture basically invented the category that they lead. They reinvented every time there was a change, during COVID again, now during the AI with the reinvented proposition. They are the most valuable and strongest IT services brand, not by chance. Another amazing trait that we think these brands have is they have the ability to build trust at global scale. Microsoft is a great example of this. It's amongst the top 3 most trusted tech brand globally. And actually trust came out across all the sectors that we research in B2C and in B2B, and there are more than 30, came out as one of the key driver of consideration and preference. So again, great trait to have. And then there is the rational and emotional security to buyer. That's what they are able to bring to the table. And as David mentioned it before, all the decision making in the industry are both rational and emotional. And emotional could just be the fact that you put your head on the line because you are one of the decision makers. And you know, the old sentence, no one ever got fired for buying IBM, represent exactly that. Another thing I think it strikes me as incredible. When you think about IBM is spending more than $1 billion a year. It's spending almost 2% of their revenue in advertising and marketing spend, despite being a 115-year-old company, so a company that's been here basically forever, and being the exemplification of the B2B buying process. So that's just, again, reinforce the fact that it's not just about building a strong brand, but also maintaining a strong brand over time. And then you have MasterCard. And in our opinion, MasterCard exemplifies brands and companies that are prepared to invest heavily to build their brand. So what we mean by that is that brand has to be a key C-suite and board factor. MasterCard has been spending relentlessly over the years on different sponsorship properties, on marketing, advertising across the world. They spend 3% of revenue in advertising every year. And it's interesting how they do it as well. When you look at the different properties that they own, they have properties for a bit more of a general knowledge, property for activation, etc., etc. So again, that's another key trait that we identified. With this year, for 2026, we've done a supplementary analysis with our data, and we've analyzed brand strength and brand rating versus capital market outcomes for B2B brands. And we came up with 4 pieces of evidence that we think should change how you talk about the brand in the boardroom. The first one is AAA rated B2B brands trade at a 46 higher EBIT multiple compared to B rated peers, which means stronger B2B brands command a higher valuation. These are the data points, and as you can see here, there is a difference from an EBIT multiple of 14 for a B rated brand to an EBIT multiple on average of 21 for a AAA rated brand. And this is true, by the way, also for A and AA rated brand. So higher multiple, but not only that. We look at forward PE ratio, forward price earning ratio, and what we found was a 66% higher forward PE for stronger brands compared to B-rated peers. 12 versus 20, once again. So what this is really is investors that are pricing in the reliability, the durability, and the certainty, higher certainty, for the company to make the money into the future. Third, lower debt cost. Stronger B2B brands, we found that can borrow at more favorable rates, up to a 60 basis point advantage. This is quite revealing as well. We look at the effective interest rate minus the risk-free rate. So basically we looked at the average credit risk premium, and what we found is that there is this difference, up to 60 basis point advantage for stronger brands. And if you're looking for another reason of why it's important to build a strong brand, as strong as you can, there is less downside in market stress situation. Stronger B2B brands show more resilient during market stress situation. Effectively, the brand strength acts as a buffer. Strong brands decline 46% at the maximum drawdown level that we identified versus extremely strong brand only 26%. So again, it's a protection, it's almost an insurance really, a protection versus bad events. So these are the key for takeaway: higher valuation, higher expected growth and certainty of profitability, lower finance cost, and stronger market resilience. So we wanted to leave you with 2 things to do before your next board meeting really. First, measure your brand strength and value. Start the conversation with a financial value that is grounded in commercial reality. Second, create the business case for brand investment. I think it's time to stop defending marketing investment with awareness metric and start building the case toward value creation. Of course, this is effectively what we call value-based brand management. Measure, understand the value, and take action to build the value over time. And of course, last but not least, demonstrate the value delivered. It's important that we don't leave, that you don't leave this as a one-off exercise. I calculate my brand strength, my brand value, and I leverage it to get, a budget to defend my budget, but it becomes a process. It becomes a way to manage your brand. So you have to track the impact of your activities to demonstrate the value delivered. And by the way, here we talked about brand strength and brand value. But really, we have to think about what are the different ways that you can leverage the brand as an asset to deliver value to the business. Because there are many different ways that we've seen B2B companies being very successful in, like if you think about Caterpillar with the licensing business strategy proposition, or as you can see from Shell, There are many different ways in which a brand can deliver value as an asset to the company. So what we showed here, brand strength, brand value, is just the tip of the iceberg, really, because brands can deliver value in the forms of tax saving, can deliver value in the forms of business licensing strategy proposition, and so on. So this is really just the tip of the iceberg. So this is our roadmap that we would like to share with you for a brand to be able to take a seat at the table, measure it, create the business case for brand investment, and demonstrate the value delivered over time and consistently. Thank you very much. And we're now gonna introduce the panel. So yeah, I hope you enjoy the rest of the event.